Today, I'm going to tell you guys one sauce to help you guys mitigate random losing trades. And it's understanding candle sequencing. What is candle sequencing? It's your open, low, high, close, and open, high, low, close. And that is how it creates each candlestick. Okay? To create one candle, doesn't matter what time frame, to create one candle, you need to go through a open, low, high, close sequencing. Again, this is not a random sequence either, okay? Within a daily candle, that time block of sequencing is 6 hour, 6 hour, 6 hour, and another 6 hour equals 24 hours, all back into the one daily candle. So to make one daily candle, you need 4 6-hour candles. Okay? So now, why do you need to understand this? And how can it help you to not taking bad trades, losing trades? So now, most people, when they enter the trades, it looks good, right? Just say here, that's right before the open. Okay? You guys can see right here. That was your daily open today, okay? Which is your first 6-hour candle open, right? You guys can see here. But now, if you're trading just price and you have a setup here, it looks good, it's holding, right? It just swept liquidity 2, it's holding, and then that's the daily close. Daily close. But for me, at this point, knowing the next daily candle has to go through a new open low or open high sequencing to even expand, I would wait at this point, not enter the trade. This is why it's important to understand time of the candle itself. Because again, sequencing is timing. It's not a random sequence. You guys can see it's perfectly 6-hour each, how it creates that open, low, high, exactly 6-hour candle. And you guys can see we're already having that pullback for the close, right? This is the point that I'm trying to make. All these expansions and all these opening price actions are exactly timed. It's within a given time window. It's not just doing an open and then randomly moving on to the next sequence. It's going to hold its sequence for a duration of that time, which is in this example, we're going into daily into 6-hour. So this is the example that we're using. So in this example, we know the sequence is open, low, high, close, and 6-hour, 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 6-hour. That is your time window of how it can create that open, how it can create that low, how it can deliver that high, and how it can deliver that close for one candle to come back and create that open, low, high, close sequence. So if you guys understand now to wait for the open low, then you wouldn't just randomly enter on this trade on a close, on a daily close. This is this is the fourth 6-hour candle, right? Open high, low, close. 1, 2, 3, 4. That's your one daily candle, which was what? Your previous daily candle. And you guys can see open high, low, close. How many candles did that precisely take? 4 6-hour candles. And it's not a guess. So if I know at this point that we're closing like this, right? Low, close, then why would I jump in at this close? Knowing that the next candle will again have to go through a open low to even put in the high and close again. Does that make sense, guys? So simply by understanding that sequencing, you can always save yourself from those bad time to trade where it looks good, right? It looks good. That's the point. It looks good in the chart, right? Price action wise, whatever you guys are looking at that point, hey, Look at this right here at this point. Your basic, liquidity traders. Okay, good. Boom, took the low out, doesn't gap down, right? This is supposed to be a move that it continues higher to the next point of liquidity, no? But why did that fail? Most people wouldn't know to tell me the answer, right? Because everything at this point should be to take out this high, just price action or liquidity wise. But now, if you understand time, right, you guys can see how perfectly that high was put in on the first six. So the purple highlighted levels are your first 6 hour candle. And then this is the third 90 inside of the third 6 hour candle. So this is more fractal things that I'll teach you guys later on in this channel. But either way, just know that this is in the New York session and this is in the Asian session. But this is the first 6 hour candle and this is the third 6 hour candle. But either way, you guys can see how we create that open high, right? And if you understand this open high, this was the open high, then you understand this move up is again for the low and close. This move back up was a closing move, not a displacing move. It wasn't a distribution move. This was the distribution move to the downside, right? You guys know your basic AMD. That's your basic AMD. And that's where AMD even comes from. It comes from your open high, open low. Those are your accumulation and manipulation, right? Accumulation and manipulation to the upside. But that all comes with time. That's the missing piece for a lot of people. You're just trying to forcefully read the accumulation and manipulation or whatever liquidity level without understanding what that candle at that point is actually doing. Is it closing? Is it opening? Is it on time for a high to be put in? And if you understand the candle sequencing, you can now, again, this is what I was talking about, right? If you know this move was for the close, then you can simply wait for open low, like I talked about, right? And then go in and then take your actions. And you guys can see off of this new open low, what do you get? Clean sweep and no gap down, right? No gap down, no closing below the previous lows. So at this point, you can expect what again? Again, time, no gap down, exactly with time. So this is not a random move again, right? Look at the highlighted level, guys. This is exactly 6 hours. Exactly within that 6 hour, it puts in that low. And with the 6 hour candle closing, which is the first 6 hour candle, you guys can see the order flow is not able to shift lower with the close. Not fair valuing lower, physically gapping lower below this low at this closing time. So it successfully made a open within this 6 hour perfectly, putting in that low. So in this example, the first 6 hour candle puts in the low, right? Then you can expect now previous liquidation levels, right? You have your previous liquidation levels. And what does the price do off the second 6 hour candle? Now going back into the white background, shifting right into first into second 6 hour candle. What do? We're now gapping higher, right? Instantly off the time shift, we're now fair valuing higher after not fair valuing lower. So this was a valid open low, and then you can expect a higher low now into the gaps, into the previous leg retest, which you guys get. And then your third entry could come off of when we displace above the open, right? So this is now your daily open. So now what are we doing? We're breaking structure, not random highs we're breaking, but we're breaking above the daily opening level. And then the moment we fair value higher, right? You guys can look for a retest back into the open, which you guys can see right here, back into the open. And again, back into the open, what do you guys see? No gap down, low, lower, low, higher, low, not fair valuing below the open. meaning it's holding the level, it's holding the order flow of this fair value, right? After breaking above the open. So again, giving you a valid entry, coming now right into time again, right? Which is your third 90-minute fractal inside of your third 6-hour candle of the day. And now exactly coming into the third 90, you get the higher low off the open, and that's your another entry for expansion. And check this expansion, guys. Exactly for 90 minutes. We're expanding. And again, what is that? That's the close, right? That's the close of what? Of the third 6-hour candle. So you can exit with the close. So again, you don't really need that much time per day to trade. Understand to come on the third 6 and trade your third 90-minute candle. And for your day trading, it could be really simple as trading those time periods and looking for liquidations, sweeps, not gapping lower, right? At those times. Again, at those times, coming right into this time, we're not able to push the order flow, right? Just like, again, finishing right into the first 6, going into the second 6, we're clearly giving a clear sweep plus not gapping down, right? These are the things that I'm looking for. Same thing with the second 90 going into the third 90, we're giving another clear liquidation back into the open, not fair valuing lower. Again, order flow and timelines at this point. So now going back, if you guys understand the sequencing of time, then you won't foolishly enter, right? And enter off of this play and not know that that's the closing play and then try to hold it thinking we're going higher. Right? That's the close. So if you know that price is going to close like this, then why would you fold in and enter at this point, knowing that you're going to have to go through a new open low cycle to even go higher again? So hopefully in this video, you guys learned something valuable. And if you guys learned something valuable, make sure to give a like and give a follow, and I'll tap in with the new video. Peace.